Should I buy silver now? I'm sure everyone is asking himself that question right now. Let's analyze the market and try to see where we're at in this crash. So in March of 2020, the various indexes all crashed within a few days of each other. So let's see what has been happening and what conclusion we can come up with regarding what to do next. If you like this type of content, remember to like, subscribe, and hit the bell so that you don't miss any future videos. So in order to decide what would be the best course of action right now, let's have a look at what has been happening since the start of the crash. I'm going to go over the various markets and then we can analyze to see what future might hold for us. As you guys know, I'm not a financial advisor. This is my own research, so I encourage you to do the same thing and decide for yourself what is your best course of action for your portfolio. Okay, so first, let's have a look at the Dow Jones. The Dow Jones is composed of very large companies and is usually used to see where the market is heading. So on February 13th, the Dow Jones peaked at 29,551 points, and a little bit over a month later, on March 23rd, 2020, it bottomed out at 18,591 points, losing 37% of its value. As of today, on April 9th, it recovered to 23,623 points, which is a bit less than half of what it had lost. So this recovery is, as you can see, is pretty steep. It's what they call a V-shaped recovery. And the thing is with V-shaped recoveries is that they're normally not natural way for markets to recover. This shows signs of market manipulation. So with all of this money printing, basically the money was invested in the stock market to try to make it recover faster than it should. We're going to have a deeper look at the stock a little bit later, but this is basically the Fed's trying to reinflate the bubble that has been deflating. So in my view, this will lead to one of two things. Either they will keep pumping up the stock market until hyperinflation destroys the currency completely, or they will have to stop and then the stock market will crash again. Let's have a look at the S&P 500. So the S&P 500 acted very similar to the Dow Jones. It took a little bit longer for it to crash. Its peak happened on February 19th, which was 6 days later than the peak of the Dow Jones. And when it did, it peaked at 3,386 points. When the crash happened, it bottomed at exactly the same day as the Dow Jones, so it was on March 23rd as well. And it bottomed at 2,237 points, which was a 34% loss, which is very close to what the Dow Jones lost, being at 37%. As of April 9th, the recovery is at 2,789. So about the same recovery as the Dow Jones. We're a little bit under half as well. So as you can see, the entire stock market is acting pretty much the same way. There are a few days difference between the markets, but roughly the same percentages of loss and gains. Now let's have a look at precious metals. Let's start with silver. So historically, silver crashes at the same time as the market, but the recovery is faster and it usually goes much higher than its pre-crash levels when it does recover. So if we look at the chart here, so as of February 19th, when the S&P 500 peaked, silver was at $18.46. Afterwards, both the S&P 500 and the Dow Jones were crashing, but silver kept its level for another week afterwards, and it peaked at $18.94 on the 24th of February, which is 5 days later than the S&P 500. Silver then proceeded to crash with the rest of the stock market, and it went down to $11.64, and that happened 5 days prior to the rest of the market. So it crashed faster and harder than the actual stock market, losing 36% of its peak value. As of today, on April 9th, the recovery has been pretty good. So it recovered more than half, and it's currently at $15.54. If we look at a previous crash in 2009, silver did pretty much the same thing. So it was at $19 prior to the crash, and then it crashed down to $11, which is almost identical to what happened this time around. And then it took about a year for it to recover to its prior level. And in the next 2 years, it climbed up to $47, almost $48. Is it going to do the same thing this time around? It's impossible to know, but it is possible. One thing is for certain is that the last time it outperformed the stock market by a large margin. Right now, it is outperforming the stock market, but we'll have to see if it keeps doing it or if it will slow down. Right now, silver is still in a critical stage of the Fibonacci retracement. The 38%, 50%, and 67% levels are usually where the reversals take place, so it is very possible that it will reverse, then start going down again. If it passes the 67 level in terms of recovery, then it's very likely it will keep going up. One thing that silver has going for it right now is that gold has pretty much recovered completely from the crash, and usually silver tends to follow gold. I don't know if it's going to do it this time around, but it is a good sign that gold is performing well. Talking about gold, let's have a look at its chart. So gold on February 13, when the Dow Jones peaked, it was at $1,578. And during pretty much the entire crash, gold kept going up. Gold actually peaked at $1,703 on March 9th. Then it went on a 7-day crash, and by March 16th, it had dropped down to $1,451 by losing 14.3% of its value. As of today, on April 9th, gold has almost fully recovered and is now at $1,694, which is just a few dollars off of its peak of March 9th. So if we have a look at gold, the green is the channel. Unless the trend is broken, this is where gold will keep going. As you can see, even with the crash that happened in March, it's still within the channel of normal prices for the uptrend. So it's still going strong upward. So it's unlikely it's going to go down unless something happens. So what should you do? The one thing that is very different between silver and gold right now is the spot price and the premiums that you have to pay over the spot price. For gold, it is still possible to find normal premiums of about 4 to 5% on 1 ounce of gold, whereas silver, normally the premiums are in between 5 to 15%, depending on, if you're buying a bullion, if you're buying a 1 ounce, if you're buying a larger size like 10 ounces or 100 ounces. So the premium varies a lot for silver. But let's say in the best cases, you can get about 5%. If you're buying a 10-ounce bar, 5% is not unthinkable. Right now, the lowest premiums you can expect for silver are about 30%. So this makes a huge difference in terms of how much it's costing you for the metal, and it makes it a lot harder to make money when you have to pay such a large premium. It is possible that silver will more than double in price, so that premium would be recouped over time, but it is also possible that it won't. Because of the large risk, personally, I think I'm going to stick to gold for now. Unless, of course, deals can be found and you can purchase at a normal premium, then at that point it becomes interesting. There's a very good chance that silver will go up a lot, like it did in 2009. So if it were to go up to, say, $50 an ounce, having paid $22 or $23 for an ounce is not so bad. But if it doesn't, then you may be in the hole for a lot longer because of the high premium. So my view is both of the metals will keep going up. They might come down before they do, but I'm thinking that the normal pattern will return and they will explode in prices once again. So it really comes down to the premiums. Calculate your premiums, calculate the percentage, and decide which one is the best deal. In most cases, it's going to be gold. If you're to pay 30 or 40% premiums on silver, I've seen up to almost 100% premiums in some cases where it's selling at twice the spot price. So if you can find fractional gold at, say, 20% premium, then it's a much better deal than it would be to purchase silver at that price. So guys, this is what I'm planning to do. I'm planning to simply look at the market as it evolves, look at the premiums, and decide each time I need to buy what is the best deal and purchase what has the lowest premium at that time. I hope this was useful to you. If you have any suggestions or comments, I invite you to leave them in the comment below. As usual, hit like or dislike depending if you liked or disliked this video. And if you haven't done so already, subscribe to the channel and hit the bell to make sure you're notified every time I post a video. So stay safe out there, and I'll see you on the next one.